What is good, guys? It's Rey-Jay back with another video. And in this one, I'm going to be talking about the SPY, the NASDAQ, the QQQs, and the indices, break down many different stocks out there and what the charts are telling us, what's very likely to play out moving forward, given the debt ceiling fiasco that's going on still. Before I break anything down about what this information is telling us, what's going on with the charts, let me just mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. The offer ends very soon, in about 10 days, so check it out before they run out. With that out of the way, let's get on with the video. When it comes to the markets, I want to just talk about what happened today. The markets pumped in the morning as we approached Jerome Powell's speech. And the market held up. We saw SPY reach about 420 in the pre-market, and the market was holding up to these high levels. On the smaller time frames, SPY was holding above, some of these EMAs, like the 50 EMA, and it held above the 200 as the day went on. But then Powell gave his speech, and the market sold off a bit. Jerome Powell said some things that weren't too great for the market. It did go against the market's, like, the Fed is going to pause narrative, and it caused the market to sell off a bit. Right, the market sold off just a little bit, but then it tried to rebound as time went on, and overall it held up quite nicely. It wasn't really a huge crash, a huge sell-off. The market is still getting bought up by the algorithms, and that's because the market's anticipating that we have some very good news coming involving the debt ceiling and also involving the Fed for June. So we'll see what happens moving forward, but first I want to talk about some more of the points that Jerome Powell made. And before I do that, let me just apologize about the quality of this video and my microphone quality. I'm recording this on a different device because my original computer ended up breaking, and it may take me, a couple of days to fix it. I may be able to fix it as soon as tomorrow, but for now, I'm just going to stick to this format and use this PC. So I'm using a different PC with a different mic and everything, so that's why it does sound much less or more like low quality compared to before. But anything, I'm just going to continue to make them this way just to give you guys content, and it should be back to normal by tomorrow, hopefully. But anyways, let's talk about Powell. What else did Powell say? Powell talked about how the Fed is very committed to their jobs, and they're going to continue to react to data that's not just delayed, but more up-to-date data. The Fed is going to continue to work hard regardless of what people are expecting. Powell did say positive things about the banks, saying that they're strong and resilient. And on top of that, rates may not have to rise as much as expected. You might think that this is good, but Powell did say other things that were not too great for the market, such as the Fed is still open to raising rates again. It's still a possibility. Why? Because it's going to depend on the data and what happens during the next cycle as we approach June. The Fed is going to look at the CPI report as just one factor. Then it's going to look at more data in June to determine if we're seeing signs of inflation spiking up again. If that's the case, the Fed could be forced to be even more hawkish. They could even Paul Volcker the economy. Is it guaranteed, though? Not a guarantee. And the market is betting that that's not going to happen. The Fed said, or at least Jerome Powell also talked about different economic theories and different policies that are going to be used. Nothing was too significant because a lot of what he said was moderated. It was already predetermined, and he simply just answered a couple of questions. It just wasn't too massive compared to an FOMC meeting or something like that. Now, when it comes to the current news, we have the debt ceiling going on, and things are becoming more political than before. I mean, I know that this situation seemed very different from what we typically see, with both sides, being willing to negotiate and talking about closing a deal by Sunday, which I'm not sure about. I mean, it is a possibility. It's also, possible they're wrong, but we'll have to wait and see. If anything, this has led to more expectations for the markets and different stocks. The market's expecting us to get some kind of deal as soon as Sunday, or very, very soon. If we get it, the market's going to rally. If we don't get it, the market is going to get a rug pull. Now, President Joe Biden and many other congressional members were saying that a lot of progress has been made, but other people especially like McHenry and McCarthy as well. Not McCarthy, but McHenry for sure. We're saying that there's no progress being made. The White House is this and that. They're unreasonable. And I mean, the list goes on. We'll just see what happens by Sunday. Let's see if these politicians are correct about us getting a deal by Sunday. Like I said, if we get it, it's going to be bullish. If not, it's not going to be good. The deal is going to pass to Congress, and they're going to start continuing to proceed with either raising the debt ceiling or doing whatever requirements are necessary. And as they negotiate, it's going to be very important. Now let's talk about SPY right now. What's going to happen if we get a bullish outcome? Let me just note to everyone that on the larger time frames, we're still not seeing the best looking technicals, but that doesn't guarantee anything about what's going to happen on Monday. Okay? So for Monday, the market could still either, get a rug pull depending on the debt ceiling, or it could get a big rally. And I really don't know exactly if they're going to close the deal or not. Historically, it takes a lot of time and they may not be able to. But at the same time, many of these politicians may not want to be the ones blamed for a potential default or us getting close to it. We're not going to default, though. I'm pretty confident we won't. They always raise the debt ceiling anyways. We just don't know if it's going to happen on Sunday or if it's going to take, excuse me, if it's going to take a little bit longer. But anyways, here's what I'm seeing for the charts, okay? SPY reached a new high of 420. Okay, that's good. We did sell off thanks to Powell just a little bit, then we just chopped around. We held okay so far as algorithms were buying into the stocks. Here's the question. If we get the deal super early, the market is going to explode. We're going to see SPY pump to 425 to 426 maybe. And is it a possibility? Yes. Is it a guarantee? No. If we don't get the deal on Sunday and there's just more and more politics getting in the way and bad things happen, we're going to likely see a negative reaction for the markets. We're likely going to see SPY start to sell off and make its way all the way back down to many like imbalance zones, which include like 415, 410, and etc. There's this gap down here at like 407. Not saying it will get filled, but I'm just saying that we have to watch what happens over the weekend. We have a conference for the debt ceiling tomorrow, and then we have another meeting for Sunday. It's going to be very important. And then I also want to add that this is just my short-term projection, guys. I'm telling you guys for the short term, we could get a rug pull down to the 410 area if 415 fails, or we could get another rally all the way up to 426, 425 to 426 if things work out as expected. I don't have my drawings available right now since I'm using a different PC, but I could use the EMAs, by the way. Let me just add one more thing, though. Now, what about the sell signals for the medium term? Well, right now, the chart's telling us they're still valid. If you look at the MACD, it's still valid. There's this downtrend on the MACD. It's getting weaker despite us getting higher and higher in terms of price. Then if you look at the RSI, it's not as valid for like, if you go as far back as like December, but if you zoom into it going to like February, it's still valid right here. There's a negative divergence right here. The price is making higher highs, right? SPY is continuing to rip up, but the RSI is only at 60. It used to be at about 69 to 70 back when this thing was around like 420, 418. So there is clearly a negative divergence developing. It's developing, so there's no promises that it has to, cause a crash for the short term. Let me make that clear. For the short term, the market could still rally depending on the debt ceiling. It's going to react to that. I can't give you guys a very objective prediction on this because I don't know what's going to happen with the debt ceiling just yet. It's really just a matter of politics and what happens, and the market's going to react to that. But for the medium term, for the June period, when we get to June, sometime in June, it's very possible. It could be a little later, a little bit after, by the way, too, but around June is what my estimate would be. It's possible for the market to get us a bit of a rug pull still because of this negative divergence. Still very, very possible and very likely. This divergence is still valid, and we're getting lots of signals suggesting that still. Okay, so it's a risk. If you look at the dollar, it's down a little bit as well after Jerome Powell spoke, but look at where the dollar is. It's still at 103. So it's still holding up, right? It's not back down to 101. It's holding up. And if the dollar keeps holding these levels and starts pushing up more, that could become even more bearish for the markets. It could. Not guaranteeing it, guys. It's just a possibility. Now, if we get a debt ceiling deal the dollar might just remain low temporarily, and the market could still rip up more for the short term. But if the dollar keeps breaking out, then for the more medium term, going into like June, sometime in June, the market could still get the rug pull. Just want to warn you guys, the dollar is showing some strength, and that is another red flag. All right. For the SQQQ, this was a little bit green, but zooming out of the chart on the daily, there's still a bullish divergence technically. The price is clearly making these lows, but the MACD is making these new highs. I'm sorry, it's holding up. It's not making new highs, it's holding up. And so is the RSI. The RSI is at 30. It used to be at about 27 back when this thing was like around the 30s. So there is still technically a bullish divergence. It's still valid on the SQQQ. It could invalidate it if this thing starts crashing lower. It could invalidate it, but for now, it's still valid. And what that tells me is that this is having this correlation with the sell signals on the QQQ for the more medium term. Now, for the QQQ, let me just note, like I said before, this thing could still explode to the upside for the short term. If we get the debt ceiling deal, it's going to hit the 340s. If they don't get the deal, if it's more delayed and politics gets in the way, it's going to make its way down to many of these imbalanced levels, which include like 329, 330 to 329, and then even lower than that for some gap fills. So we'll wait and see what happens for the short term. Bullish price action is still a possibility. However, when you zoom out on the daily chart, you could quite clearly see that there is this negative divergence on the MACD still. MACD is making these like lower highs for every one of these peaks. And the RSI, it used to be at about 73. It's currently at about 71. It reached about 72.95. But for now, it still has technically a developing bearish divergence and a negative divergence on the RSI. It's still developing, not saying it means we have to crash immediately, but it's still developing, which means in the future, like a little bit more later, approaching June, sometime in June, likely, maybe a little after, sometime in June, there's likely going to be a very significant pullback, very significant sell-off, and that is going to affect the markets. It's going to affect Tesla. You have to be ready for it. Now I'm going to talk about many different individual tickers right after I talk about the VIX. I'm going to keep this video a little brief, by the way. Looking at the VIX, there is still a bullish divergence right here that was developing. You can see it right here. It has been holding up so far, but there's no sign of a breakout yet. So it is still possible for the VIX to go lower because there's no clear sign of it breaking out. Let me just add that on the weekly, there is still technically, a potential bullish divergence right here. It still is valid, but like I said, it's not looking as strong on the weekly as it was on the daily. So we have to be patient with the VIX. The odds do favor a breakout for the future, though, but we have to be patient for it. As far as Amazon goes, I'm going to talk about individual tickers now. For Amazon, there is a bearish divergence on the daily chart still, on the MACD and the RSI, which suggests the odds favor it potentially getting a sell-off. However, it's not a guarantee, okay? Now, from a technical standpoint, it's looking a little bit weaker to me. And we do have this gap all the way back down to about this like 113 area, but technicals are not everything. What matters more is going to be the news. Technicals make me like a little bit more inclined to saying that bearish outcome is more likely, but it's not guaranteed. So that's what I want to say as clearly as possible. Technicals do not always guarantee everything. What matters more is the news. If we get a bullish outcome, right, from the debt ceiling, this thing is going to fly to 120 plus quite easily. If we don't get the bullish outcome and things are bad, Amazon's going to fall all the way down to 113, if not 109 to 110, basically. We'll see what happens with the debt ceiling. Technicals are looking like Amazon might cool off a bit, but what matters more is going to be the news. As far as Meta goes, it also had, let me just double check, a bearish divergence. So it has a bearish divergence forming. It's in the process of forming, not a guarantee that it plays out just yet. But for now, it's going to react to the debt ceiling. Good news is going to bring this thing all the way up to 252.5. Bad news will bring this thing all the way down to about 242. And if that fails, there's 240 flat, then the 234 zone. Which is more likely? I'm honestly in the middle, but it's a little more likely that, this bearish divergence plays out, that's forming. But like I said, I'm in the middle. I'm open to anything. I don't want to be too fixated on anything. But always be open-minded regardless. As far as Google goes, I told you guys this thing could make its way up to about 125. I thought it would cool off first and maybe hit 125. We reached 126.48. It's very overbought. That's the interesting thing. There's nothing else going on. It still looks strong. That's the thing about it. It looks relatively strong. There could be a topping candle today, so it might see a stall off later on. But like I said, it depends on the news. If we're bullish, 127.5 could come. If we're bearish, it's going to retest. Excuse me. It's going to make its way down to 120 flat. If that fails, then there's the 118 area. Tesla, if we're bullish, okay, good news. When I say if we're bullish, I'm talking about the debt ceiling. If we're bullish after the debt ceiling, Tesla's going to push up for 183. That's where the gap fill is. And if it breaks that, it has the potential to hit 185, then 189 to 190. It could make a big move up to the mid 180s if we get some good news about the debt ceiling. Tesla also has a lot of relative strength thanks to Elon Musk during the shareholder meeting, some of the big announcements he made involving new products and things like that. However, if we get bad news, okay, if the news comes out and it's not what we want to hear, Tesla could get a rug pull all the way back down to 175. And if that fails us, we're going to be watching the very low 170s. Let me just note that I think on the 30-minute or the 1 hour time frame, we do have imbalances that develop somewhere. So like right here, we already met one of them. There should be another one. I think like right here, there's an imbalance at like 168. So we might see Tesla come all the way down there if we get a big rug pull because of the debt ceiling. Not a guarantee though. I'm not guaranteeing that that's going to happen. Tesla could always still push up. It still can rally to the moon. It just depends on the news. And I'm not really a fortune teller. I don't know what the news is going to say. So we have to be patient on it. As far as Aapl goes, if we're bullish on Aapl, it's going to make its way up to 176, then 178. If we're bearish from the news, Aapl is going to retest the 200 EMA on the 30-minute for 173. And if that fails us, it's going to make its way down to about 170. And it really depends on the extent of how bearish we are. There's a giant gap below for Aapl, but for now, it's holding up. One thing that's concerning is there was a bearish divergence that developed here. It started to play out already. Could this continue to play out? It's a possibility too. It continues to sell off because of the debt ceiling, but not a guarantee. All depends on the news, of course. Last but not least, I don't think I've covered everything. I don't think I have to. I'm going to cover more tickers, guys, on Sunday anyways. For NEO, this is showing some strength after their bigger investments into nuclear fusion companies. I think it's holding up nicely above $8, but I'm not seeing too much going on with it because it's very choppy right now, stuck in this channel. If it's really bullish, we're going to retest 8.28, then 8.4, then 8.69. If we're bearish, it's going to make its way down to 8, and if it fails, 7.9, then 7.8 will come, and there's a gap down to 7.6. So, like I said, I'm in the middle for NEO. I mean, it just depends on the news. And that's about it for the video. So I want to just thank you all for listening. I really appreciate every single one of you guys. I have some merch for you guys. If you're interested in buying anything, it should be around the comment section. And last but not least, don't forget about the Webull link. The offer ends very soon. Put in any amount of money and you're guaranteed up to 12 free stocks, and it can be worth up to $3,000. All right, thank you. The market, Tesla, NEO, Meta, Amazon to the moon, because the long term is still incredibly bright despite some short-term fluctuations. And peace out.